Welcome, ladies and gentlemen, and welcome my two guests. Not just guests, they're good friends. They're advisors to Matterhorn Asset Management, and we are back with another Maminar. Now, Maminar sounds a bit strange, really. We've called it that for a while, and at some point in the near-term future, we'll probably call it something else because we are contemplating changing the name of the company. But that's so far. Don't try to guess what the new name would be, but we will let you know in due course. So I welcome my dear two friends here, Grant Williams. I mean, I've known them both for ages. I mean, and I've aged, as you can see, but they're still as young as they were when I first met them a long time ago.
Hardly.
And, you know, I've specially dressed up for you here because I think this is a special occasion. Also, not just meeting you, but in the world. And some people might notice I have, first time for a long time, I don't have a yellow tie. So, you know, that might have a significance. Probably the significance is that we don't need to support gold anyway. He's going to go by his own without having yellow ties. Now, so Grant, welcome. You are a prolific speaker, writer, talking at conferences all around the world. You meet very, very interesting people, and we share that with you in your podcasts, in your videos, etc. So I'm really glad that you're joining again. And Ronnie, of course, as I say, I've known him since I had shorts, almost. He was a young man, and
he's still a young man.
Yeah, he's still a very young man. It must be nice to have this young face and happy smile. So Ronnie is known also around the world. I mean, he writes a report in Gold We Trust with the team, of course, that is read by almost 2 million people. And he's also world famous in the gold market, speaking around the world. So again, welcome and to this webinar. And certainly we have a world now which we can talk about for a long, long time. And, you know, this is like the perfect storm now. Well, we've all been following and writing about the economic problems, the risks in the world. You know, I've been worrying about that for the last 25 years at least. Mainly we've been writing about financial problems and economic problems, debt, etc. And obviously, all three of us are very interested in gold, and gold is a consequence of all these problems and as protection against the problems. But you know, now we have, which is part of the cycle we are in. Now we have the war cycle really starting in earnest, and that is very, very serious. And you know, we had Ukraine, and everybody got and Russia, where everybody got used to Ukraine. It seemed to be not headline news all the time. And then, of course, another problem and another war sets off in the Middle East. I mean, I don't know how many I have experienced in my lifetime, but I certainly remember the you know, in the 70s, the Yom Kippur War, etc. And we know that that situation will never be resolved, unfortunately. And the danger is now that it could become a lot bigger. So that really ties in with the first point I wanted to discuss with you, which is the move from west to east of the whole world. You know, with the BRICS and the world economy, and the Western countries led by the US, now in a faster decline, which, as I see it, will accelerate. That will mean that also the more rapid fall of the Western currencies, including the dollar, and you know, the buildup of the whole BRICS movement, with more and more countries joining, and you know, we're talking about up to 30 countries joining the BRICS in coming years. And you know, that is a significant move that we all three have talked about. And Ronnie, you wrote a newsletter for our website just a few days ago. By the way, the sun behind me is the sun setting in the west. It's actually one of my pictures. It's from the Baltic. And here is the sunrise in the east. That's from the Mediterranean, but it's it's still the East. And you know, they look the same, but they're very different suns. I mean, but this is where he's going. The West, the sun is going down, hopefully not totally, and the West becoming dark, but it's going to become a lot darker in my views, whilst the East is rising, not just the sun, but the economy and the power over the. You know, this is a long-term movement. It's going to happen over the next decades, Ronnie, as I said, you wrote an article. I'll take away suns now and just have my background where I am for the time being, which is the Baltic. That move, Ronnie. Let's hear about what you just recently written about and how you see that in relation to gold, Ronnie.
Yeah, thanks, Egon. I think that the topic of let's say the significance of gold in the Eastern world compared to the Western world is really an important one. So therefore, we really digged into that topic. We crunched the numbers, and I think it's quite staggering. And we in the Western world, we always think that we are responsible for the majority of all developments in the financial world. But I think when it comes to gold, actually, the price of gold is more and more being influenced by market participants in China, in India, and obviously also in the Arabic world. And I think those numbers are really, really staggering. So, for example, I mean, but let's perhaps say first that what's going on now in the gold world, this extreme resilience of the price of gold versus rates that are surging. I mean, today the 10-year yield is at 4.8%, and it seems that it wants to go higher. And let's say in a normal environment, gold would be selling off, but it's not. It's actually up 1.5%, and this is some sort of a development that we've seen over the last couple of weeks. And the fact that, real rates over the last 18 months have risen so significantly, and the price of gold is actually holding up so well. We're very close to new all-time highs in US dollar terms as well. I think this is a sign that something has changed in the gold market. Now, it is obvious that starting last year, central banks really took over. So last year we've seen the highest central bank demand for gold in history. Basically, central banks bought more than 1,100 tons of gold, and those central banks are obviously primarily from emerging markets. So it was China, it was Russia, it was also Singapore, and in Europe it's been, for example, the Czech Republic, Poland, Hungary, Turkey, obviously. So it seems that there's really gold is flowing to the east, and this is what James Steele once said when he was, I think, still with HSBC. He said, gold always flows where prosperity is, where real growth is, where savings rates are comparably high. And I think that's what we're clearly seeing at the moment. So this is the first thing, central bank demand, especially from emerging market countries. The second thing is, and this might sound a bit technical, if you have a look at the infrastructure when it comes to gold trading, it's really developing very, very quickly. It's a cooperation between the Chinese and the Russian gold markets that hasn't been commented on in the Western world too much, but I think it's significant. We're seeing that the Shanghai Gold Exchange is trading more and more. We're seeing that their services are becoming much more sophisticated. And then it's also the India International Bullion Exchange, which is really getting more traction recently. So this is the second point. And then I think the third point is actually private demand, consumer demand. Just one thing. in the year 2000, the annual consumer demand from China and from India was roughly 28%. Last year, consumer demand from China and India was responsible for more than 50% of all demand globally. So it is really this combination of consumer demand, private individuals, but then also central bank demand, higher sophistication and more trading locally and less so on the LBMA and on COMEX. And then I think another very important development is obviously that it seems that the Shanghai premiums, I don't know if you followed that, but the Shanghai premiums are consistently on a higher level than previously. And this just tells me that actually investors want to have the real stuff and not paper contracts. So it seems that this is kind of the perfect storm for gold. And as I've said, we in the Western world should perhaps be a little bit less arrogant and more open to the developments in the eastern parts of the world.
Yes, and the West is not even aware. You know, we can see from our business here, and we deal with big investors or build private investors from all over the world that want physical gold for wealth preservation purposes. And you know, the buying was quite strong at the beginning of the year. It's been very slow in the summer and the last few weeks also. In spite of what's happening now, people react very slowly. There's uncertainty in the market now. People don't know where to go and how to protect themselves. But nevertheless, you know, those trends that you have been talking about, from west to east, and that increases in gold buying is primarily in the east, of course, that's happening. I mean, most countries in the West, including the US, are not buying any gold at all. They're selling. If you look at even at your charts over the last 20 years, I mean, the US has been a net seller. Germany has, private investors in Germany have bought a bit more. But this move in gold, of course, gold moves up for many reasons. One, over time, it always moves up because we measure it in money, which every 100 years or so goes to zero. The paper money, you know, as Voltaire said, always goes to zero, and it is this time happening again. But you know, there is a combination of the money printing, money creation that makes gold look higher because it actually is just measured in useless money. But there's more to it also. Gold also moves up because of geopolitical uncertainty. And Grant, but you are very familiar with this also, because and you speak to a lot of people about it. You know, so how do you see that gold relationship to the political and geopolitical situation in the world?
Thanks, Egon. Look, it's funny, you know, people always try and ascribe all these things to gold. It's moving up because of this, it's moving down because of that, it's going so. Gold never does anything. It's an inert rock, and it's always just there, right? Gold just is there, and it's immutable, and it's inert, and it's just an element. What happens is things move around gold. So when people talk about gold going up, it's nothing of the sort. You know, it's the value of fiat currency going down, and that's what we're seeing. You know, the three of us have spoken about this at length over many years now, and price is a great focuser of attention, particularly in the precious metals markets. When the price moves to certain levels, people want to know why, and they want to come up with reasons for it. You know, the truth is, and we all know this move from west to east has been going on for a decade at least. There's been a very, very steady flow of gold, physical gold, from the west to the east. But the price hasn't really done the kind of things that make people want to understand why. Now, with real rates going higher as they are, and gold performing incredibly strongly against that, you know, the gold price, and we'll talk in terms of gold prices to make it easier, has been remarkably resilient in the face of the kind of move in real rates that ordinarily people would have expected the gold price to fall significantly. So people want a reason. They want to understand why something is happening that is unexpected, that why it doesn't kind of fit in with how they would expect something to move given the circumstances external to it. And so suddenly this flow of gold from west to east is a good reason. It helps people put something in context and explains it. So it gives people a way to go, okay, now I understand why the gold price is doing what it's doing.
Okay, can I just interrupt you for a second?
Yeah, go ahead.
Grant, we've been obviously we're following it very closely, all of us, price-wise also, but I'm not really interested in price because I know that gold always will go up in real terms. But nevertheless, we have a number of investors, as we talked before, around the world, and gold now recently moved down. And it moved down to, what was it, 1820 or something like that, 1810. Just not long ago, just 10 days ago. And we saw that as the last move, and we also told people who are waiting to buy, but psychologically, people don't like buying when things go down. And it's so, to me, this was the last opportunity to buy gold at a decent price. Not that that's going to matter in the long run, because gold is going to, again, measured in paper money, go up substantially. So it doesn't matter if you get it at 1810 or 1910 or 1950 or 2000. But nevertheless, the psychology of investors is always that, if it goes down, no, and I'm nervous, rather than this is an opportunity of a lifetime. So people don't quite understand the significance of gold, not as something that you trade and buy low and sell high, but something that you actually hold for generations, if you want. Sorry, just coming back to your point, Grant.
I've completely lost the thread of what I was saying earlier. Listen, I'm afraid. I'm not quite sure. I'm not quite sure where I was going with that now. But
we are talking about, you were talking about that, gold moving again. We're all talking about gold moving east, and your good friend Luke Roman. I mean, he has made some interesting points about gold and gold as which I totally agree with. That gold could be the future central bank reserve rather than American treasuries, which are or bonds, which are obviously sooner or later going to become worthless. Maybe you tell us a little bit about what you discussed with Luke.
The world needs a reserve asset, right? And for half a century or more, that's been U.S. Treasury bonds. The U.S. was the biggest economy in the world. The U.S. Treasury market was the deepest, most liquid market in the world. And let's face it, there was no shortage of supply of Treasury. So given the amount of oil trade in the world, Treasuries made for a perfectly understandable reserve asset. The only problem with it being it was never a neutral reserve asset. But that didn't matter though, because the world worked. The US having the US as the global hegemon, as the provider of the global reserve currency, and importantly the global reserve asset, worked because we lived in a relatively benign environment, particularly after the end of the Cold War and the falling of the Berlin Wall. Now, obviously, geopolitical tensions are ratcheting up in just about every direction you can see. And so having a central reserve asset that isn't neutral, which Treasury bonds certainly are not, as we saw when the Treasury sanctioned the Russian central bank and froze their assets after they went into Ukraine, suddenly there's a scramble for a neutral reserve asset, one that is not at the whim of another government. And so that just kind of puts another floor under the demand for gold. And that, in my mind anyway, is the main reason why we've seen so much central bank buying of gold, because they were forced to do it. It wasn't for all of them a choice. Some of them it would have been a choice, but there was an element of we have no choice here but to increase our allocation to gold and decrease our allocation to Treasury bonds, because who knows? Maybe in a year from now, we make a decision or we choose a side that the Americans don't necessarily agree with, and we cannot put ourselves in the position that the Russians found themselves in, of having their national reserves frozen.
Exactly.
So the sooner everybody understands that the world has changed significantly, not just in the case of the return of inflation and the fact that we've had 40 years of declining rates and we're now in an as yet to be determined period of rising rates, but we've been in a period of relative geopolitical calm, and now we are going into a period of relative geopolitical conflict. And that changes just about every calculation you have to make. What is safe now, what is neutral now, what is going to hold its value over time, what will perform in periods of elevated volatility, elevated geopolitical tension, elevated financial market stress, elevated interest rates, elevated inflation, all the things that we haven't had to worry about for 4 or 5 decades, we now have to worry about all at once. And whether people like it or not, whether people believe in it or not, is immaterial. Gold is a solution to an awful lot of those problems. It will hold its value through these periods of instability. And now, after a period of everybody focusing on how do we make money, we are entering a period where people are going to say, how do I not lose money? And gold is a terrific way of answering that question. So, I think all of these things are coming together, and gold, when people go through the problems they're facing and the problems they feel they're going to have to mitigate going forward, you kind of go through those flow charts, and a lot of them end up with gold. And we're starting to see the first signs of that. It's not that this should be a surprise to anybody, because what's happening has been brewing for quite some time. It's that until it happens, it didn't really seem to matter to anybody. And now people, rather than having a plan for an outcome that they really, looking backwards, had no real reason to believe was going to happen, now they're having to deal with it because it is happening. And I think that is going to see an awful lot more people moving towards an increased allocation to gold in their portfolios.
Yeah, I totally agree. We moved into gold because we looked at the world and worried about the risks. And this was 25 years ago. We worried about that and bought gold at the beginning of the century for ourselves and our investors, obviously in physical form outside the banking system, which is the only way to hold it. But and so we've been in gold for 25 years, assisting people around the world to preserve their wealth, not to make money on investing in gold, but just to protect their assets. And we're also talking about, for bigger investors, generational assets here. So we've seen a move during our time when we actually bought serious amounts of gold from 300 to 1900, and in other currencies, much bigger moves, even in take pounds or Swedish kroner, and of course all the weak currencies in South America, etc., much bigger moves, Turkish lira. But in spite of that move, which is, again, as we point out, that's a move, the currency move, not really a gold move. But in my view, and because we see that also the buying, the investors haven't started buying gold yet. You take a typical average US investor, as again Ronnie pointed out, is actually gold is less gold bought in the last 20 years than before in America. So nobody's buying gold. So in my view, what we are seeing and what we've been doing for 25 years, where we have had investors from 90 countries, is that this gold move, in my view, has not started yet, because no one has been buying gold. A little bit of central bank buying in later years, but overall, investors are not owning gold, and you're talking about still around 0.5% of world financial assets in gold, only 0.5%. And in my view, that's likely to change in coming years. Ronnie, what do you think about that? How do you see that trend?
Well, I think it's what I said before is that gold is flowing, and those numbers are significant. So just in the last 20 years, I think 34,000 tons of gold were imported by China and India, and it's not coming back. It's really a one-way street. Yeah. And then and they really want to have the physical stuff. And then on the other hand, I think the ETF demand is a good proxy for Western financial investors. Yeah. And if you have a look at ETF demand, you can see actually outflows over the last couple of months. The Western financial investor doesn't care about gold at the moment. Yeah. So I think this is going to change. We are very pro-cyclical. And I can tell you that quite recently I got a number of research reports from strategists that I really like, that are getting more constructive on gold again. So that's definitely a sign that something is changing. The momentum seems to be picking up. But I think if we go above the all-time high in US dollar terms, because we always emphasize it. For example, in Japanese yen terms, just have a look at the chart. I mean, it's from the left down there up to the right. It's just, a perfect chart, gold in Japanese yen terms. And we've made so many new all-time highs recently. It's the same with most other currencies.
Yeah.
But everybody is staring at the dollar price of gold. And I think if we make new all-time highs in dollar prices, then I think, the next stage, which is this kind of accumulation stage, will really start. And, then that's going to be the point in time when all the private banks will say, well, we advise our clients to add 2 or 3% gold to their asset allocation, which is, from my point of view, it doesn't make any difference. 2 or 3%. It has to be at least, I would say, 10 to 15% to make sense from a portfolio perspective.
Can I just say, when we started with gold, over 20 years ago, I already then said, because we have obviously wealth preservation type investors, I said, I think up to 50% you can own that. I mean, that was obviously good advice, because gold relative has gone up more than anything else since the beginning of this century. But people are still thinking, even one of the foremost experts in the world on gold, writing a lot about it, recommends 10%, which is surprising. What the hell do you do with the rest of your money if you only put 10% in gold? Why do you think that will lead then, this increased awareness?
I think, if we take a step back, Egon, I think it's such a complex set of issues, of crises that we're facing. First of all, it's a debt problem. I mean, the bond vigilantes are back, and it seems that we have seen the downgrade by Fitch, and it seems that investors kind of realize that there's a limit to budget deficits. And for the US, I don't know the number, but I think it's 7 or 8 trillion that they will have to refinance just next year.
7.6.
How much?
7.6.
7.6. The second major problem is obviously a very speculative environment that we've last seen probably in the 1920s and in the 1990s. We've seen it in real estate. We've seen it in private equity, in the startup scene. We're still seeing it with those magnificent 7 stocks in the US that are doing still pretty well, while the rest of the market is obviously going sideways or lower. And then we're seeing kind of a setup that is pretty similar to the 1970s, a setup that is characterized by high inflation, very sticky inflation, and then also geopolitical issues. So I think, this is a pretty complex setup that will probably not just go away very quickly, and therefore I think that many people kind of start realizing that, and what's been going on in the bond market is this drawdown that we're seeing in total return terms. It's even worse than the drawdown of equities during the great financial crisis. Now, as bonds are basically the foundation of most institutional portfolios, this is really significant. And I think that many people still haven't realized that yet, because they think that equity markets are just more interesting than the bond market. But I think this will make people really start thinking, what should be the foundation of my portfolio? And this leads me to a thing that I think I've mentioned it here before. I once did a big keynote in Istanbul, and the Turkish investors, they really know everything about gold. And I was really, you know, I loved the conversations. I loved the questions. I wasn't able to answer all those questions because they were so good. Why? Because for a Turkish investor, you know, inflation is the very first thing that you consider when you structure your portfolio. And therefore gold is more like, you know, the foundation of the portfolios there, while here in the Western world, it's rather, you know, it's a satellite investment, it's an alternative investment, it's something only for, you know, doomsday sayers. But I think this is slowly but surely coming back as people realize that the great moderation is over.
Yeah, Ronnie. One thing I would just say there, you know, it's interesting when you talked about how the fact that this 2-3% allocation just doesn't matter to gold, and you're right on an individual basis, of course. But if you get every pension fund in the world, every asset manager in the world allocating 2-3% to gold, it makes a massive difference because it's such a small, such a tight market, and people need to understand that. You know, this idea that the standard allocation going back 20 years was about 6%, I think, going back 20, 25 years probably, 6%. Yes, it doesn't mean much in a world where Egon has advised his clients to have 50% in gold, and a lot of people that you and I know have, you know, between 25 and 50% of their portfolios in gold. But at the margin, a 2 to 3% shift on a general basis into gold would be massive for gold, and the market simply could not absorb that kind of inflow anywhere near these prices.
No, Grant, and as we both know, that can never be satisfied by more gold. There isn't more gold in the world, and the people who now hold gold are not going to be willing sellers as gold goes up. And therefore, because we can't produce more gold than the 3,000 tons plus scrap, etc. So therefore, the only way to satisfy that is by a higher price. People will get just less gold for the same money than they could before. And that's what we're going to see. And that's what's really going to move the gold price up, of course. And if it then becomes a central bank reserve asset, it's going to go up in multiples, as Luke Groman says. And I believe that that's possible too. But, you know, I'm looking at, well, we come on to portfolio later, but Ronnie touched upon geopolitical risk, and you know we are talking here about moves in markets and debts, etc., interest rates and gold. But are we, Grant? Are we looking at an existential risk here, an existential problem? We, of course, no one can answer that question, but you know the risk for a major global conflict is now greater than ever in my lifetime, at least. I was born right when the Second World War finished, and that we have seen nothing like this before, certainly in the last 78 years that I've been around. And therefore, you know, obviously we're all worried about that. But how do you read that, Grant? And you know, what do you expect to happen here?
Well, look, it's when you talk about an existential risk, this is an existential risk to markets because it's outside markets, right? This is not market-based risk now. What we tend to do is we view everything through the prism of markets. And when we think about risk, we think, how does it affect my portfolio? How does it affect the bond market? How does it affect gold? How does it affect all these things? When realistically, that's not the risk, right? The price is a reflection of people's evaluation of the risk to the life we live, the world we live in. And I would say that what's going on now is very much an existential risk to markets because we're not seeing direct action in the markets. This is conflict in the Middle East. This is conflict in Europe. This is inflation. This is Ronnie talked about the bond vigilantes being back. You know, all of these things are not relative to a company's performance or the solvency of a country. You know, the US is no more insolvent now than it was a year ago. Let's face it, it was bankrupt then, it's bankrupt now, but suddenly it matters, right? There wasn't zero risk in the Middle East 3 weeks ago, but suddenly it matters to everybody again. You know, all these things are starting to force people to price them in to markets now, and that's really what's happening here. We're starting to see markets faced with risks that were there all along, but they didn't seem to need addressing, and now they do. So the Middle East, you know, Egon, you and I, you have seniority on me by not by much though. You still look
couple of years.
Yeah, but you know, we're both old enough to remember when the Middle East was a problem on a daily basis, when there was a headline, an explosion, an attack somewhere, seemingly, you know, if not daily, then certainly weekly. And the world got used to that. The world got used to there being a part of the world that was unsettled, that conflict was ongoing, it was simmering, it would occasionally bubble up. Then we got used to the complete reverse. We got used to the fact that there wasn't conflict in the Middle East, and it was pretty quiet. And yes, we'd have the odd problem here and there, but generally that involved the US Army going into the Middle East and those problems flaring up with moves into Iraq and into Afghanistan. The reality is the same. The reality is those same risks, because they are elemental risks. They're fundamental. A lot of them are based around religious lines. They're not worried about markets. They're not worried about oil prices. These are fundamental schisms in that part of the world that the Berlin Wall falling haven't addressed, and a rising standard of living haven't addressed. And here we are again, where these things matter once again. Now, I think there is an awful lot of opportunism here, in that America has not seemed as weak as it is right now for a generation. And I think there are elements in the Middle East that are testing that are using this opportunity to say, well, look, okay, America, you know, you've pulled out of Afghanistan, you've talked in increasingly isolationist terms. There's a war in the Middle East. We can see that there is some reluctance on the part of the policymakers there to funnel unlimited amount of money to Ukraine. We can see fatigue in the streets of another war, and more money going to foreign aid when inflation is a problem and people are struggling to feed their kids. So let's just see what your resolve is like. You know, there's a very good reason why Janet Yellen came out 2 days ago and said, "Oh, America can absolutely afford to fight a war on two fronts." I mean, of course they can, but of course they can't, right? And so
that wasn't a follow-up. That wasn't a follow-up question. Where will the money come from? But we know.
Well, of course, we all know where the money comes from. It just gets printed out of thin air. And so, can they afford it? Of course they can. But in a time when the deficits and the debt are beginning to matter to people, they can't. And so, you can expect to see countries who are not necessarily happy at being under American influence testing their limits. And will that include China with Taiwan? Very possibly. And so this is going to continue for a while now. There is no quick fix to this. The world has changed. And those existential threats, existential though they are to markets, are threats that are very, very old, Egon, and very long-standing. And they're just going to become a much more clear and present danger to people than they have been.
Yes, absolutely. But you know, we are here, which is really all in within a little area. We can see this fight between that, which has always been the case with wars, a religious war. It's called religious war, but whether it is or not is another discussion point. But it is then between Israel and the Muslims, if you want, and then the whole world gets involved. But you know, you talk about it as if it could be limited to that and not go further. But you know, if you
I didn't mean to imply that at all. There's a very, very clear transmission for this to spread much broader. Absolutely. So no, I don't think this will be contained in the Middle East unless we get some serious elevation in the skill of the diplomats trying to resolve this. Because so far, I've seen no diplomacy whatsoever. I've seen rhetoric and posturing and, you know, pandering to the crowd and statements that are designed to have a certain effect in the media and play well here and play well there. I've seen zero diplomacy. You know, we didn't see much diplomacy with Russia before Ukraine, and look what happened. So this could absolutely spread.
It's so sad, isn't it, Grant and Ronnie, that, you know, you have these now, there are two wars, major wars, and the West, led by the US and where Europe just follows because they always do. And first of all, there's not a statesman in the West. And secondly, they only have one solution, again, led by the US, is send more money, send more weapons. Nobody is sending peacemakers. Nobody's trying to make peace. Now Biden came to the Israel, but he's not going to make any peace there at all, of course. And I mean, what did he say about he said that bomb now or the rocket over hit the hospital? He said that was the other camp or something, didn't he say that the other team?
The other
team. You know, it shows you it's like a team competition here. I know it's difficult to define, but nevertheless, you know, I'm obviously, you know, I've been concerned about this for a long time. I mean, this is potentially an existential problem here. This you take, you know, oil is obviously always part of the religion, wars, oil, and here you have, you know, if it escalates, it's so easy for Iran with the support of Russia to close the Strait of Hormuz. And there goes at least 25% of the oil supply in the world, which is enough to paralyze the world, basically. And then it will, of course, if that happens, then you are into the World War situation, potentially. So the risks are enormous here, and you know the question is, how do we protect ourselves on different levels? And you know, physically, well, we don't have time to go into that. How you know, where do you live, and how do you live on the mountaintop? Do you live on an island somewhere, etc.? You know, some of us are on the mountaintop some of the times, like me, and you are on an island some of the time, Grant. But you know, we can't hide from the world, and you have families, etc. That you obviously you need to help and protect. But so let's. I mean, that's could be potentially a big problem, you know, how we live, where we live, etc. And as I said, it's too big a subject to cover here. But what we could do on a more positive side, Ronnie, is to talk about, you know, how should people protect themselves financially? And we have gold, of course, but what else? What do you suggest?
Well. I think what's really becoming more important and really central when it comes to investing in those kind of circumstances is counterparty risk. I think you have to choose the bank that you're dealing with very carefully. You have to choose the broker that you're dealing with very carefully, and then I think it's just not the time to take enormous amounts of risk. I was just attending the Precious Metal Summit in Beaver Creek, and you can tell that you know, the junior exploration market is really on the very end of the, let's say, the liquidity stream. So they can really feel that liquidity has completely dried up. You can buy terrific projects for like, I don't know, 20% of what they were valued at a year or 2 years ago. So it seems that for the time being, you know, we will see, and that's my take. Obviously, the Federal Reserve is still, or now everybody in markets is talking about a soft landing or a no landing and higher for longer, all those terms. I'm still in the hard landing camp, and I feel pretty comfortable being on the other side of the trade than the Federal Reserve. So it seems that, you know, we will see more bankruptcies, we will see more turmoil in markets. So it's probably not yet the time to really become very aggressive when it comes to taking risk. So as I've said, counterparty risk, play the defense a little bit more in that setup. I think that's really crucial. And from my point of view, what's really next to gold, what's really holding up very well is commodities in general. I mean, we shouldn't forget that All G7 countries are very, very late cycle. Even in recession already, we are seeing that China is not doing so well. And given those headwinds, I think commodities are holding up tremendously well. So that would be another idea. And just one quote, or let's say two things, if I may, because I had a chat with our mutual friend Brent Johnson, also in Beaver Creek, and Tony Greer was on the table, and we talked about what's going on, and that was obviously before the whole situation Mideast, and we said, well, it's the fourth turning, and we just hope that it's let's just get it over and then start, you know, with a more positive view again, and this is really, it seems that it's for people like us that, you know, have learned the lessons from history and that really think in in long cycles. It's pretty frustrating that it's actually, you know, this fourth turning scenario is exactly playing out at the moment. And Grant had a terrific conversation with Neil Howe about that recently. And the second thing that I just wanted to say is also from Brent Johnson. He tweeted that out because many people ask me on my view regarding the whole Mideast situation, and I say, well, actually, I've got no clue. I mean, it's such a complex conflict that is going on for such a long time. Who am I to say, you know, what will happen? And Brent tweeted out, if you want a tiny peek into the vast arrogance of man, just look at the number of people on Twitter who think they not only have a firm understanding of the 2,000-year-old conflict in the Middle East, but also believe they possess the solution to now fix it. And I think that's a very, very intelligent statement. So therefore, I've got no clue how it's gonna go. I just feel and I just sense that it will take quite a long time. It will probably escalate. It's already escalating, and it's not only Russia, Ukraine, and now the Mideast. If you follow what's happening in the Balkans, but also in Armenia, it's also pretty challenging. And you know, this multiple set of crises, of wars. Yeah, that's definitely a sign of a fourth turning scenario.
Yeah. Grant, you spent a lot of time with Neil Howe on the fourth turning, and because Ronnie just said that, you know, somebody said, let's get it over with. Yeah, sure, but what does that mean? Let's get it over with. Does that mean that we're back to plow and horse, or plow and an ox even? Or is it something better than that? Of course, we don't know, and I don't think Neil goes that far in his view, but so where do you see this leading to, and how do you see that people should behave in relation to that?
Look, I think this is a fourth turning. I absolutely believe that's where we are. And you know, this idea of just get it over, this is a multi-year process that began in 2008, and according to Neil, you know, will end sometime closer to 2030 than here. So if he's right, that gives us probably another 6 years of this. So get it over with is not, you know, it's not a quick process. And I think because of that, when you think about how you need to position,
and 6 could be 10, of course.
6 could be 10. It's possible. But you know, when you think about, okay, how do we navigate that? There are 3 things I think you need, and those are gold, cash, and patience. And I think of the 3, patience is the hardest to come by because we've lived through a period of instant gratification, and people aren't patient anymore. There's no investing. Everything's a trade. Everybody wants to buy something in order to sell it. No one wants to buy something to own it. And I think this is a period where you want to buy things that you can own, because being able to trade them and being able to sell them is not going to be as simple as it has been. You're not going to get as many opportunities. And so, you know, because of that, understanding that the time frame we might be looking at here is measured in years rather than minutes, which it has been for many, many years now, it changes the way you think about your portfolio. And so, you know, having gold, a timeless asset, you know, I've been bullish on gold for 25 years, right? And not once have I thought you should hold all your assets in gold. It's a ridiculous idea. But I think now you want no, but all of it. I don't think anyone should have all of their assets in anything. It's just crazy, right? It's a bet that you have to get right, and you have to be right day one constantly. You need some kind of diversification. But having gold now, an increased allocation to gold, having cash to give yourself the opportunity to pick up things that are selling at distressed prices, and there will be periods of great distress going forward, I think. And having patience, having the ability to sit there and not feel compelled to do something every day. It's just, these are cheap, therefore I should buy them. No, these are cheaper than they were yesterday. I should watch them because maybe they'll be cheaper again tomorrow. And I think with this idea that this could be a 6-year period, I want to own energy. I really do want to own energy. I think owning energy for the next 6 years is going to be, for many, many reasons, too numerous to go into now, is going to be a great trade. And it's going to be something you can buy and hold.
Yeah, oil and uranium, I think great things to hold, absolutely. Can you hear me?
Yeah.
Yeah, go ahead, sir. Continue, sir.
Oh.
No, I was telling you when you say
you've done it to me again.
Yeah, sorry. Okay, okay, it's very good. I know. I'm happy I can get you off the track sometimes. This happens very seldom. But you say hold energy. We haven't talked about details, but I mean, oil is obvious, gas also for that matter. But oil more. But uranium, I think, is just that's a secret that very few people know about.
Gas. I want to own natural gas. I think that the energy transition, we're already seeing the realization that it's not going to be done when everyone said it was going to be done. There is going to be a need for fossil fuels for longer. And whether you like it or not, whether you agree with it or not, whether you think it's good for the planet or not, humanity can't survive without energy. And so, people are going to have to suck it up and say, well, we're going to have to use oil for longer. The capex has not been put into those spaces that is going to be needed going forward, and more people need energy and natural gas again. So look, they're long-term ideas, but I think anyone taking a short-term view for the next several years is going to have to be a hell of a trader, and that's a skill that very few people possess, and an awful lot more people believe they have, and I think they've had that reinforced with the way markets have been going up steadily. They are going to find in a hurry how good their trading ability is, and I would not want to find out that I'm not a good trader in the next few years. I'd rather have found out a few years ago.
Yeah, no, I agree, and I think, in my view, you should have most of your assets outside the banking system now, because we don't know if that will survive, in what form it will survive. But if it survives, it's going to be certainly with money worth a lot less than it is today. Gentlemen, we're getting to the end of our discussion, which has been extremely interesting. And we raised a lot of problems. We cannot obviously solve them. What we do know, though, is that the risk is there, and the risk is greater than ever. And this is why protecting yourself against this risk is absolutely critical. And that's what investors should take away from this. We don't know what's going to happen to markets, although we have a view, but there's no certainty, and we need to be patient. But that was one of the first questions you asked me when you started Real Vision. Was one of the things you learned. You did a short interview, and I said patience, and that's absolutely true. All right, you have to have patience. But of course we haven't got a clue what will happen to the geopolitical situation. But we know again that the risk is massive. And everyone should be aware of that. Then I always come back, life is uncertain, and life is, of course, also ephemeral. But when we're here, we're all having fun in our own areas. We're having fun with our business, in our relationships with our business friends and real friends like yourselves, and of course with our families. And in the end, it's all about circle of good friends and family. And then, as I always say, whatever happens to money, there's so many good things in life that are free. obviously friends and family, but then nature, books, music, etc., sports, whatever. And that's what we must not forget, that it's not all about money, even though we spend a lot of time worrying about that and trying to help people. Ronnie, a final word from you?
No, well, I mean, I think what's pretty interesting in this setup, and I only recently realized it, is actually we're running out of safe havens. I think that if you have a look at what bond markets are doing at the moment, with yields really going through the roof in a setup where in a previous regime, I think yields would have gone tremendously lower. So it's really moving in the opposite direction, and then gold is moving, is rocketing higher. I think this is a sign and a confirmation for this thesis that we are indeed running out of safe havens. And as I've said at the beginning, I think we should not forget that the Eastern world is really catching up quickly. I mean, everybody during summer was kind of getting crazy regarding this gold-backed BRICS currency. I was a bit hesitant because I said, well, it's only a tweet from the Russian embassy in Kenya, so I don't know if that's a really good source of information. But still, I mean,
clearly
those developments. Pardon?
Yeah, clearly is. I said for a lot of people. Yeah.
But it's happening, and if you look at the agenda for the upcoming BRICS meeting in Kazan next year, they will talk about settlement system. They will talk about the payment system. So it's happening, and I just think, and I'm totally certain that gold is playing a major role in that new setup. And I think now really is the time when markets in the Western world kind of start realizing that.
Yeah. Thank you. Grant, any final word from you?
No, I think we've covered an awful lot of ground, but I'll give you one very quick final word, and that is complexity. People need to understand that complexity has increased dramatically in every facet of our lives. It's increased at home with kind of managing household budgets. It's increased in budgets in markets. It's increased on a geopolitical basis, and human beings are not well equipped to deal with complexity. It takes time, it takes patience, it takes understanding, and we've kind of gone down this road of getting a quick take on everything and a hot take on everything, and being forced to react to the world when it's going to get increasingly complex going forward. And just understand that. People need to understand this increasing complexity, understand that making snap decisions is probably a very, very bad idea going forward. You need a deeper understanding of what's going on, and where do we get that understanding? That's a conversation from another day. But this ready, fire, aim approach that we've had for such a long time is not going to serve you very well, I don't think, in the next several years. So try and understand that this is a very different world, and work out what you need to do to adapt the way you function to deal with it. And gold actually, I think that's a good thought. And gold is actually anti-complex or anti-complexity. I agree.
Yeah, absolutely. Yeah. Absolutely. So simple. Great discussion, Grant and Ronnie. I really appreciate having you on here as usual, not just as advisors, but also as friends. Hopefully we'll still be around for a while, and so we can, not today, I mean, but in the future. So we can continue to discuss these things. In the meantime, I want to thank you. I want to thank our viewers, and obviously, wish everyone the best that we can have in these circumstances. So thanks very much.
Likewise.
Bye-bye.
Thanks, Egon.
Bye-bye.
Thanks, everybody, for listening.
Bye-bye.
Bye-bye.